We love beers.
We love finance.
And we love more beers.
Together, we're Finance on Tap.
I'm Dan,
I'm Baxter.
And I'm Nathaniel.
and this podcast is for people that love beers and want to learn about finance. So let's get into today's episode.
This week, Baxter has chosen
This is my choice.
What
yeah,
have you
your
chose?
choice. Which one is it?
Anyway,
What's it called?
It is called the Mountain Culture Juice Trip.
Read the top line.
Fruit enhanced hazy. That's all it says. Fruit enhanced hazy.
Surely
the juice trip.
I mean, you've got to underline the juice trip, surely.
So I think
The
that's the
fruit.
thing. Where did we get it from? The BWS Indrapilli at the bottom level near like the Woolies and stuff like that. And it stood out like a sore thumb. The packaging, especially.
You're going like full what is it? ASMR.
Yeah.
You know, like with your.
Yeah, for those of you
Yeah.
who want to hear what Nathaniel sounds like when he drinks, that's now available. That's crazy.
I don't know. It is fruity. It is beer. Here we are.
I think it's acceptable.
Bax.
It's strong. It's like 7%, two standards for the can. Yeah, two standards for the can. I think it's decent.
Decent.
I probably, I'm not gonna lie, I wouldn't go out of my way to buy it,
Yeah.
but that's purely, I think more so because it's so heavy, like two standards.
I think if you were one to judge a book by its cover, so to speak, you would probably find yourself looking at this going, that looks cool, I want to try it.
I think this is like, when I think like bush doofs or music festivals, I think this should be like the sponsored drink of them.
It's got like a parrot
And
licking
potential-
an orange slice.
The parrot
Do you see
looks
that?
like he's having a sick time, to be
That,
fair.
that could
Look at his
explain.
eyes.
That could explain the juice trip.
Yeah.
I think that's part of the brand. Yeah. I think if you and your mates have, like, it's someone's birthday, you're having a big weekend, like, this is a good beer for it.
Yeah.
You think you've had a big day on the tools, you want to go home and chill out. I think this might be a little bit much for that.
Well, I'd agree. As soon as the day is done, let's get out a juice trip.
That's crazy.
Mountain culture. Let's go. No, that's good. Here we are again, boys. Finance on tap now.
Anyway, yeah,
Oh,
a bit
yeah.
to the loan side of
Yeah,
it.
we
Eh?
get the loan side.
Yep.
And, a lot has happened since we were last together.
Do you want to
doing a
tell us
podcast.
what's new and developed in the world of the Woodrow?
New and developed, eh? Well, it's funny. I think I was talking to Nathaniel earlier today, and it's been funny because we've had some like new team members, like, you know, growing. It's about you know, as you grow the business, you're learning every single day, right?
Yeah.
And then
What have you learned?
I'll tell you what haven't I learned? And it's just about managing expectation. I think it's a big thing for everybody, whether you're training someone or whether the person's getting trained. And I think that what we've gone through recently is a transition of growth, which is really, really cool. And,
How?
How?
You're asking
No,
all the important
You want
questions
to-
here.
Very important
We're learning and we're
questions.
growing.
How?
How are we learning?
How are we learning and growing?
T-
Well, I think it's. I'm glad you asked that question because I didn't know where I was going with that for a second. I was
Yeah.
like, oh.
Right, he's had too much of the juice trip.
Too much
I think
trip,
it's
not
actually
enough juice.
happening. I'm actually tripping out. But no, it's crazy because when you get someone that really wants to do what they want to do, they'll do whatever it takes to learn,
Okay.
and
Whatever it takes.
whatever
to
it takes to learn. Like, you know, whether you're coming in on time, like come in early, you know, just be present, all that kind of stuff. You know,
Yeah.
and it's crazy just watching the team grow.
Right on.
Right on. Yeah, you know what it's
No,
like.
no,
Guys
so
coming in
we're-
early and leaving
so-
on time.
We've grown.
We've grown. It's
We have
And as I said, growers are showers. It's showing that we have grown and starting to get out there.
we get out there.
Yeah.
Anyway, we had some topics that we wrote down that we were going to talk about
Yeah.
today. One of them was LMI being dirty. I know that. And the other one was, do you remember?
Is it dirty? Like, as in,
No, it's good dirty. Like,
Okay.
people hear LMI.
It's not a dirty word.
It's not a dirty word. So when I say LMI being dirty,
but the
I'm
bird is the word.
Yes,
a big
bird.
advocate on this. LMI is not dirty. Like people hear LMI and they're like, run away, don't do that.
What is LMI though? Like
Which-
for the people that are just,
What does it stand for,
yeah,
Baxter?
what does it stand for?
I actually got this nailed. So I've done both sides of this. I went from collecting in debt collection from LMI to helping people buy houses with LMI. So I've done both sides of this. LMI is done by a third party in most instances.
Yeah.
And it's called Lender's Mortgage Insurance. That's what it's short for. LMI isn't for the buyer or the borrower. It's for the bank, and it's a third party insurer that looks after it looks after the bank for whoever's buying. Typically, whenever you go above 80% loans value ratio. So, for example, if you are buying $1 million house and you get a $900,000 loan, you're lending 90% of your property's value. You'll likely have mortgage insurance.
Yeah.
And what the mortgage insurance does is say that is 25K and that gets added on top. So your total loan is the 900 plus the 25, 925.
Yeah.
If you stop paying the loan for whatever reason and the bank can't recover the funds and they send you the relevant notices, etc., do all that kind of thing, and they have to repossess the property, if they were to sell it for only 800,000 in that instance and pretend you never made a single payment, so 925K, don't worry about the interest, that remaining 125K from the repossession, that gets paid out by the mortgage insurer, and then you owe the money to the mortgage insurer.
Yeah.
Okay.
So it's essentially just giving the bank confidence to lend you above 80%.
I think it's so fair, right? It's an interesting concept because when you're dealing with, clients and things like that, they come in and they almost hate the banks, right? Because they've got to pay them so much money. And I respect that. Not talking about the ATO right now. We're talking about the banks.
Don't start
Wait,
on this
that's a different
conversation.
You don't have to open that kind of can of worms right now.
My bad. We won't go there.
Are you sweating after hearing that?
Huh? No, I don't think
But like, it's fair because you think about it, right? And you go to a bank and, hey, I want $1 million. Also, that was the chair. That wasn't me, by the way.
Excuse you.
So, sorry. But you go to the bank, you want $1 million. And it's like, well, yes, you've got a deposit, you've got your good income, but the bank's giving you $1 million.
Yeah,
So
that's it.
you've got to understand that with money comes a little bit of risk. And at the end of the day, this is what I used to call it. I used to call it opportunity finance as well. So if you get lender's mortgage insurance, it's an opportunity that you can get finance right now
Yeah.
and just put it over the life of your loan. So how about that?
So I have a question for you then.
Yeah, go.
In what instance then, say I'm a buyer,
Yeah.
when, would I be able to justify LMI?
Literally any time that you want to buy and you can't get a waiver for it.
Why not?
Because LMI it's not to kick the buyer in the teeth, it's to enable the buyer. Because without LMI, you go back to, the 2000s, pre-2007, you go back to then, and that's when you've got this position where if you didn't have the 20% deposit, then you're going in and you're having to buy. Well, you can't buy. The risk appetite for the lenders isn't there. They're going, if you don't have 20% plus costs, we're not willing to risk it to lend for you. So the mortgage insurer is, yes, avoid it when you can, but it enables people to buy with a lower deposit that couldn't buy otherwise. And even I work with a lot of buyers agents. I work with a lot of real estate investment advisors, and the amount of times where I get clients who are under advice and they will specifically go out of their way to ask for a 90% plus LMI deal rather than say an 80% deal where they could avoid LMI. It happens all the time because it enables them to retain, say, deposit, buy 2 properties instead of 1.
There you go.
I think LMI is something that if you can avoid it, cool, do it.
Yeah.
But if it is going to be the result of achieving your goals, then embrace it because that's the enabling factor for you.
And it's funny because it's like anything, right? A change, or you talk about the elephant in the room or whatever, and lender's mortgage insurance, and especially in our industry.
Wait, what's the elephant in the room?
Well, other than me. But,
That's crazy.
But other than me, it's the stigma of I don't want mortgage insurance, which is so fine. And if there's a way, we'll find it. And on the scheme of things, if you're a first home buyer, there's so many different options that we've got for them.
There are a few waivers, I'm mentioning, building on that as well, right? With if I can avoid to pay LMI as much as possible, then why not, right? So obviously as a first home buyer, there's schemes for that now starting 1st of October.
Yeah.
Yay. but also, depending on your job, right? So based on your profession, what kind of professions kind of, enable me to waive LMI, Dan?
Well, that's the thing. There's so many. Like you've got your professionals, like your medicos, your doctors, surgeons, essential services. The interesting thing, like we've got a home for everybody in that sort of sector.
Do you want to 1 second just say like, because just remember a lot of people don't know this. What is an LMI waiver? And when you say waive LMI, like who's this applicable to? How does that work?
Yeah,
because some people hear that and just think, what do you mean?
Well, yeah, that's so fair. Well,
waive LMI.
Waive LMI.
Yeah, tell me how you waive LMI.
See you later, mate.
See you later, mate.
We ain't paying you today.
Kiss it and send it on its way, or what?
Which is actually really cool because get this, like you've got the government scheme, which is essentially an LMI waiver, thanks to the government, subsidising the difference.
Exactly.
Your guarantor loans, so mum and dad, bank of mum and dad. One day I'll get there, but supporting you with their property to waive mortgage insurance as well. Then you've got certain professions that can do the same sort of thing.
Yeah.
And what it's doing, instead of you having to come up with in the day and age of 20% deposit, which is extremely hard these days, there's opportunities.
Yeah, on a $1 million loan, that's 20% is $200K, right?
Yeah. Sorry, I just want to dial us back because we're talking what an LMI waiver is.
Yeah.
Because I just think we haven't.
My bad, I got distracted.
An LMI waiver is an LMI waiver is essentially where you can lend above the standard threshold for when lender's mortgage insurance would be applicable without having to pay the mortgage insurance, and in most instances getting the interest rate pricing with as if it was 80% or below. So for example, if, as we said before, most banks have 80% loan to value ratio is where you pay mortgage insurance. Some lenders might say, okay, well, if you are a registered nurse and are APRA registered, or if you are a practicing doctor or a practicing solicitor, etc., or like specific professional industries, careers, then what they will do is they will deem it as a low risk application and they will then waive the mortgage insurance. So as we said in our example before, $900,000 on $1 million property, that's 90%. You might have $25K mortgage insurance on top, $25K loan and a slightly higher rate because you're on a 90% LVR. The LMI waiving lenders will go, okay, well, wait up. Even though you're on 90%, you're low risk because you're a registered nurse and you're APRA registered. That's our policy. It's just $900K flat, no mortgage insurance, and you get a better interest rate. And that can be, there's also lenders that have no professional requirements around that. There's a lot of them, like, your Pepper, I think there's another big bank that's about to bring that in October 1st, which I can't say because it's not announced yet. Yeah.
Find out later.
Yeah. To be confirmed. But yeah, so it's not just limited to like professions. Like now a lot of banks are embracing wealth at the moment, for example, up to 85%. Any person, any borrower, no mortgage insurance or protection fees. Pepper, 90% right now. It's a big thing that people are diving into, and it's a huge benefit.
Well, I think the banks are finally realizing that the market is going crazy. And everyone's trying to jump on and protect the buyers because it's difficult now to get into the market.
Well, if you have, like we were doing, I was doing the math with a client the other day. If you have, say, a $600,000 loan, right?
Yeah.
Two of the exact same scenarios, one with a major bank and it's $6,000. And let's say you're a Sparky, right? Unfortunately, there's no LMI waivers with the major banks for that, besides the first home guarantee scheme. So let's say you're buying an investment property. And if that Sparky goes for a $600K loan, let's say 90% flat, then they have to add LMI on top of that. And let's say it's another $15K and they have to pay interest on it. They have to pay that for the life of the loan.
That's shocking.
If you go with one like Pepper, for example, they'll take an extra about % on top of the interest rate than what one of the majors will, but $0 LMI. So although you're paying a % higher in your interest rate, you're off the bat saving, before you even step into the loan, you're saving about $15,000. And then as you build equity, 12, 24 months down the track, you then refinance into a major lender. And it takes about 3+ years before the cheaper interest rate becomes more cost effective than the LMI waiver. So it's crazy how many like strong, solid, great borrowers are now electing to go to LMI waiver lenders to save up front and then refinance as equity grows.
Yeah.
Because
it makes sense.
Yeah, I know, right?
It makes sense.
You talk to a doctor let's not go a doctor. Let's say like an engineer, for example, right?
Yeah.
Really good borrower, really good income, all that kind of stuff. You'd never think like, oh, I'm going to recommend that this person goes to Pepper over, say, a major lender. I'm just using Pepper as the example because they have a really good policy around this right now. Not anyway.
Wow.
Yeah, so use them as an example. Like you would never say like, you'd never think that recommending them 1.5% interest rate higher would be the better option for them. But over that short period, for the time that they would be with that lender, it is a huge saving for them. And it's enabling people. And I think...
But I think, and some people don't know, like when you go to a broker, this is the whole point of it, right? Is your situation is going to change throughout your life.
Yeah, exactly.
As your financial changes, your needs change as well. And that's one thing I say to everybody. Like, you know, we're meeting today. This is your recommendation, but you know, your job changes, your situation changes. That's what we're here for to you know, recommend further products.
And that's why like having the right strategy to suit your financial needs is going to be the most important thing. And that's what we do, right? Based on someone's goals, needs, and objectives, right? We're going to put them in the best position that's going to serve them, not just short term, but long term. I think I said that on the previous episode as well.
The amount of people that
you did. I remember it well.
The amount of people that you get that thank you for it, for like, and you know, it's all love for the game, right? For finding the right thing for the client, but it's cool when you get the thank yous. And they'll be like, I spoke to another 2 brokers or whatever, and the bank, and they all said I can't spend this much, and then you actually had the balls to be like, well, how about you take on 1.5% higher interest rate? You can spend this much, no LMI, and that's the result. Other people love it. Yeah, it gets you into it, and most people will take on a slightly higher rate to get a significantly better property.
It's the way the market is now. You know, there's so many, you know, different ways to lend money now. You can see, you go on Instagram, there's always someone selling something like, come to us, buy this property, we'll show you an investment strategy.
I've been seeing a lot of a lot of ads for the Finance on Tap podcast. Are you trying to sell this podcast?
Yes, so don't forget to subscribe. We'll show you how to get multiple
Listen,
properties.
we are trying to sell this Pepper product,
I get disclaimer. I don't even do that much with Pepper. I'm just using it off the top of my head.
Yeah, you're going to end up with some chilies in your pocket later.
That's crazy.
Yeah. But that's the thing. You see all these things on, you know, all these magical ways to lend money, and there's nothing magic about it. It's just structuring everything correct.
Yeah.
I'm just pulling up.
That's some crazy wizardry, Dan.
Don't start that.
Here he goes again. The grand wizard
strikes again.
I've got this.
That's so good. Cheers.
Notes done here because we're not at the point yet where we have the laptop on the table. You know how like you see the professional podcast and they've got. We do have a professional podcast, and shout out to Luke for setting this up because it's a lot better than what we would do. Now we're going to get the laptop at some point.
If this gets
what we want here,
laptop in.
We'll get a laptop in.
Where's our
How many likes do we need?
We need 100.
100 likes.
100 likes, and Dan will buy a laptop. That's crazy.
And then we'll put the laptop.
That's pretty low numbers. So one day we'll get.
What if I can spend like $5 to buy 100 likes for the video?
Can you actually do that?
Yeah, you can buy. I'm 99% sure you can buy likes.
Is that what you do on all your?
Yeah, that's what I do on all the posts I collab with you because I get nothing. They actually just get dislike comments.
Yeah.
Time for a break. No, just kidding.
All right. Let's talk about something crazy. What is the wildest way that you've seen a client come up with a deposit?
The wildest way.
So this can be anything from first time you're speaking to the client, looking at the bank statement, what's going on there, all the way through to spoke with a client, they had no deposit, and then a day later suddenly they're ready to go.
It's funny, it's whether it's crazy, but I've always been a firm believer if you want something bad enough, you'll get it.
Yeah.
And I think clients, because you got to think, how emotional is buying a property?
100%.
You know, and it's like,
especially your first one, right?
Yeah. It's like,
is this leading into Ask Daddy?
No. No, I had
That's crazy.
yeah.
Gift letter.
Daddy, could I please have some money?
Yeah.
But no, I kind of probably a few years ago where they're a little bit short and they just decided, you know what, I don't need my car. I'll just sell my car. And away they went and got a property and got a car later on. So
Yeah, right.
Nothing crazy, but
I think the widest way for me and the best way is just having a budget and sticking to it.
well,
How wide is that?
that is.
Does anyone have a seat?
Right.
Luke, I need a seatbelt right now. I need to plug in right
Yeah,
now.
right.
I'm about to fall off. This is crazy.
Honestly, when I have meetings with clients, right, and I have
tell me.
a lot of these ones, right,
Am I allowed to
where
say-
we break down, hey,
Well,
I've
yeah,
got
you
this
can talk
much.
to Luke.
Is that like talking to the? I thought I was going like
We're breaking the fourth wall.
Yeah, breaking the fourth wall.
Yeah.
Have
no,
I-
breaking the fourth wall is talking to.
I'm sure people know that.
Have I just broken the fourth wall?
I'm talking to you.
What is breaking a fourth
That's
wall?
crazy.
Huh? You're talking to the viewer.
Also, if you were like on the other side of the mirror,
Yeah.
it's like prison sort of thing.
I think it was on
watching
the
an
other side of
interview.
something. I just can't remember it.
Huh?
What are you on the other side of?
I'm on the other side of this beer right now.
Yeah, good job. So what's
Not sponsored.
okay? Now you've had a little bit more of the beer. What's your positive? What's your thoughts?
On what?
What
On
beer?
the beer?
Yeah,
It's a good beer. Like
I
I'd drink
think-
it again.
It makes sense you gravitated towards this one.
yeah, it does make sense.
Yeah. The flavors specifically.
So out of this week, we've had a pretty well. Actually, it's a wrap up of the month. Like we've had a pretty decent month. Probably our biggest since
I think
we've had
our
the business.
lodgement month.
With
Yeah.
first quarter of financial year 26, hey?
Lodgement month. We've definitely had the best lodgement month. Lodgement quarter and month we've ever had.
Very
It's
cool.
crazy. We've done good
Yeah,
numbers.
we've
So when you
done
say
good
lodgement,
numbers.
what does that mean
Lodged
for the viewers?
The viewers.
for the viewers. Dan,
Well-
you explain a lodgement.
Oh, it's just an application. You sign up to an application and you're helping a client get the deal approved.
And you press submit
Press
to the
submit
bank.
to the bank.
Achieve their dreams.
Actually
Achieve their
sent to the
dreams.
bank off to get assessed and approved.
Yes, that's
And
the
bang.
we
lodgement.
have done between the three of us 20. Last month was 27.5 million
That's pretty
lodgements,
epic.
and this month we haven't finished the month yet. So I get Lockie on the line right now because he better get those.
Better get it working.
But no, yeah. So I think this month we're on track to do more than
Yeah.
that as well.
But for the quarter,
cool.
what are we on? Like 80s?
No, it was, we checked this morning 90 million
90,
for the quarter
sorry,
between the
excuse
three.
me.
Yeah.
So
We're pretty lucky. We've got good following. We've got good clients, good referral partners. Keep them happy. It keeps coming. Happy days.
Yeah.
Happy days.
That's. Yeah.
Anyway, well, actually, on this, now let's be at Lockie. For anyone, this
What
is
do you
context.
think about the ties? I want everyone else's opinion. I want them to comment whether we should wear ties or not. Because to be honest, it keeps like.
If you put it in the middle,
Well,
dude,
maybe
I
it's
call
my
you out right
belly.
now. If you put it
It's
in the
probably my
middle,
belly.
yeah, you put it in the middle, and it will cover that split.
Yeah.
Right?
Cover
When you
the
let it go to the
buttons.
side, that's a problem. Keep it there. You know, before I
That's a
spent
nice
like,
tie, though.
did you see
Thanks,
like
man.
Where's it
20 minutes how I was doing this?
Peter Jackson.
Then you see, I was doing this for like 20 minutes. I was trying to like put it in front of. I
Yeah.
was trying to do one for my boy over there, and you just wouldn't.
Oh,
even,
really? I'm so sorry.
Yeah.
Thank you. I missed the subtle clues. You know?
Mm.
But well, that's good. There
Hey.
we go.
Anyway,
Ties or no ties? That's what I want to know. Put a vote.
Yeah.
you're right.
Can we make a thing? Like,
A tie.
A
Well,
poll?
you wear a tie every day to work, yeah?
yeah.
So you're gonna wear a tie every day to work and then take it off to go on the podcast.
Yeah. Anyway, leave it to everyone else
Yeah.
to
All
decide.
right. Well, for our one listener, please comment. We guarantee you will have a very majority vote.
Majority stakeholder.
Go, Dan. We agree with Dan.
We will have anyone. Oh no cap! Anyone that comments a tie on this, an opinion on the tie,
Yeah,
we
yeah.
will make a Teams call or a video or some kind of audio call, maybe in the
Yeah.
next episode or
Discussion.
something,
Yeah.
and we
Yeah.
will get a group discussion and vote going.
Yep.
On the tie, like
Whether
what
we do
happened-
the ties.
I'm not trying to get politically, but what happened
Yeah.
in the poll, how they like did the votes on, like they literally did on Discord.
Yeah.
We will do a group discussion. Everyone gets to talk.
Yeah.
All like one of our listeners will get to talk on this group chat, and we will come to a amicable decision on whether the ties are essential
Okay.
or
Well,
not.
well, if that's the case, even if it's one listener, vote for me and your wildest dreams will come true. Off with the tie.
I know that you make Nathaniel's dreams come true, but
Yeah.
Well, join the team. That's what happens.
Property.
Property. Business.
Mm.
Happy days.
Yeah. I mean, how often do you get to have a few beers and talk finance with your best mates, hey?
Oh, stop it, you little
I never get to
sausage.
have a beer and talk about finance.
On a podcast.
What about when you go to
On
an
camera.
appointment? I'm keen to hear. Like when you go to an appointment, would you? Because you get offered like coffee, beers, all this kind of stuff. What's your thoughts on that? Like, would you accept the beer, or would you go? I'll just get the water. Thanks.
It depends. All right, to be fair, I think if the client's offering you a beer,
Yeah.
then it's okay. But I can't remember. I don't think I've been offered a beer at an appointment.
Really?
No, because I don't.
Yeah, that's fair.
That's wild.
I'm not. I just don't think that I don't get. I haven't been offered a beer.
No.
But
I'm
would
just
you
going to
refuse
leave
a
it at
beer?
that.
So if I'm your client and I come to your appointment
That's
and
so
I come
true.
up with an esky and like, hey Baxter, I just finished work. I've just got this esky of beers. Do you want one?
There's nothing wrong with having a
Or
beer.
so you'd say yes.
What kind of beer though? Like, let's say they pull out like a
Say it's a
something.
You know,
mountain culture.
we need to
fruity
draw the
something.
line between when you would say yes
Yeah.
and when you would say no. Okay.
Okay.
So let's get an initial gauge here. So you sit down and they say, let's do something easy, like, hey, you want a 150 lashes? I got a stubby here.
Yep.
Well,
Baxter, it's 8 a.m.
Okay,
it's fruity.
that's right.
Immediately,
8
yes.
a.m. 8 a.m. is a problem. Whether we're not doing that
Right.
in a professional setting.
So would you ask
Well, you
for
offered it. You
a
literally said
breakfast
it.
smoothie
Well, I'm not
instead?
offering the beer at the appointment. Like,
You literally just
hey,
said
nice to meet you. I'm Baxter. Would you like a water, tea, coffee? I have 150 lashes in the fridge as well.
Yeah.
So it's 8 a.m. No, if they offer you a beer and it's, I reckon, past 2 o'clock in the afternoon, past Wednesday, acceptable.
Past Wednesday.
Wednesday.
Why Wednesday? Okay, half the week or something.
Because I feel like you just don't need to be having 2 o'clock beer on a Tuesday or a Monday.
Yeah. Fair enough.
Yeah. 2 o'clock on a Tuesday would be wild.
Yeah, it's Tuesday. He walked us into that. Well done.
Oh, today
But
is
well done.
Tuesday.
Boom, boom, boom.
Okay, we've done ours out of like love for the game. When I
Yeah.
say game, I mean the podcast,
Yes.
not love for the beers.
Finance on tap.
Yeah.
Hands
Right.
on tap. Like
No
we
cap.
didn't want to have to drink these beers at 2 p.m. today. We persevered. We made ourselves do it.
Oh, gosh, it was tough.
It was tough.
Really was. You know, really played well out there today.
Yeah.
That's the thing.
Also, Broncos. Right?
Broncos.
Hell yeah.
What a game, hey?
What a
Oh
game.
my goodness.
Man,
kick
that was sick.
brutal.
I know, sorry, I didn't mean to digress, but I was just saying that was pretty good.
no, in the same weekend with the Lions as well, winning the grand final.
Oh, wow.
Insane. It was actually an
Half time, I was sweating.
Absolute scenes for the Brisbane
Yeah.
boys.
I'm
And
not going to lie, I didn't watch the AFL.
No, that's right.
that's
Right.
great. Nathaniel was over. He watched the AFL with us.
Yeah. We were all sweating like half time. It was all tie game.
It was pretty hot
Nathaniel
day.
was sweating for another reason.
Unbelievable.
Pretty hot day.
Yeah, it was very fun.
He went for a run
It was a
halfway.
great day. Yeah.
There you go. Well,
Yeah,
Right,
Brisbane.
did we end up thinking, because we were going to bring a game each week, did we end up thinking of the game?
no.
No.
Were we going to play like a hot seat at one point?
Hot seat. Let's do hot seat.
hot
We
seat.
can do hot seat.
Finance hot seat.
I could do. I can get this up because we can do.
Yeah, go on then.
I don't know. We could makeshift a hot seat here, right?
Okay.
Yeah.
I could do. There we go. Rate or mate. And we'll name like 2 banks and not going off best pricing.
Yeah.
You have to guess which of them is offering the best website advertised interest rate. So, for anyone that doesn't know, like basically with brokers, you get the website pricing and then you actually do the pricing and the broker side of things, and it typically comes out a lot better.
Yeah.
So we're going not off that pricing, which we all know. We're going off advertised to the general public pricing. So let's start. I'll start.
Go.
Is this where we go over here?
Was variable fixed?
We're going standard variable with an offset account, and we're going, say, 80% LVR, principal and interest repayments, owner occupied.
Okay.
We're going to go round 1. And what we should do, actually, we have a spare beer. So whoever loses,
Ooh.
I'm going to do best of 3.
Yeah.
And whoever loses
Did you say with an offset or?
with an offset, whoever loses has
Wait, is this
What
on
is
our
an offset
panel
then?
or
Actually,
on on just the internet?
I'll just do on panel. I'll just do on
Okay.
panel.
Okay.
And so I'm going to ask, and both of you have to say what you reckon the advertise. So what you reckon the best one is, which bank you reckon is the best, and then what rate you think they offer.
Yeah.
Yeah.
And whoever gets the most points out of 3, the loser has to have the spare beer.
Gosh, I wish I could just go off best rate. That'd be nice.
Okay, so we're going to start. I'm going to go.
And not everything's about rate, Dan.
That's true.
I'm going to go. Yeah, but for this
For
it
this,
is.
it is. Okay.
Okay. All right.
We're going AMP. AMP standard variable with an offset account. And then we're going to verse that against the advertised interest rate for a ME bank standard variable with an offset account.
Well, that's not fair because you looked at it, ME Bank yesterday.
Well, I'm asking the question, so it doesn't matter.
Fair enough.
All right. True. I think
Are we just doing those two?
yeah, just
So
Let's
it's a best of 3. So you have to guess which bank has the best rate.
Yeah.
And then on top of which bank has the best rate, what you think their rate is. Because if you both say the same bank, it's going to be whichever got closer to the advertised rate.
Okay. And are we
think it's-
assuming it's like an 80% land?
80% principal and interest offset account.
standard variable package with offset. I think ME Bank.
ME Bank.
This is not priced loan. This is advertised on the
MeBank.
on the online. Anyone can view this, right? So we'll start. Nathaniel,
Yeah,
who do you want to
Yeah,
start?
ME Bank.
And what do you reckon the
ME Bank.
rate is?
No, you have to choose first.
Oh, so we choose and then say that,
Yeah.
what the rate is? I can't even remember what ME Banks is, to be honest.
Actually, I'm going to change it from 80% to just that like when
What?
you go on it, the best advertised rate that they have. So like, you know how they advertise from like 60% OVR
Yeah,
or
that's like
50%.
60%. That's going to be different.
Yeah, so just go from like 60%, whatever
Nah,
you think.
said 80.
No, I'm just saying, just go for like whatever you think their premium rate that they advertise on the website
Okay.
is.
All right.
Well, I mean,
Okay, so we got
Yeah, I go ME Bank.
ME Bank,
Yep.
and then we've got
I'll back AMP. Why
AMP.
not? I'll go
do
different.
you guys? Okay, now
Okay, who's the
what
winner?
rate? What rate do you think? No, I won't do that too because one's right, one's wrong. ME Bank
Yeah.
is better.
Yeah.
Boom.
Okay.
So 1 point Nathaniel. We
Damn.
got close. 5.43 is the best
Yes.
advertised rate with
5.43. Yeah.
with
right.
with AMP, and then on your ME Bank you've got a 5.34% rate. Keep in mind this is not the best rate you can get with a bank. It's on the website the best rate you can
on
get
the
with them.
website. Fair enough.
So we got 1-0. Right, first to 2 points wins this.
I can't believe it beat me like that.
1-0. No, that's right. I just memorize it. I
Yeah.
just.
Okay, how about we do this one now?
Okay.
New to panel. We're going to option number
Ooh.
1. Option number 1. Or do we want? All right, I'll let you guys choose.
Okay.
Do we want lenders or do we want? Or
I
do we
just
want
think
bank?
anyone, like, it doesn't matter.
Because I'll let you two choose. We're gonna go between. We're gonna go between First Federal and Arthur Mac, or between People's Choice and Gateway Bank. I'll let you two choose.
I'm going to go Gateway Bank. Right, in terms of best,
But which of those two options do you want?
I'll go Gateway.
Do you want Gateway and People's Choice, and then what do you want?
First Federal. I got to
We're
back
talking
my
about-
boys.
All right,
back.
rock paper scissors. No, we're,
Wait,
going,
we're
from
talking
First
about
Federal.
we're
best
choosing
in this.
which of the best of do you want. So I'll give you either option number 1. You choose between the best between First Federal and
Arthur Mac.
or option number 2. You choose between the best of People's Choice and Gateway.
Yeah.
So you said Gateway and you said First Federal. So you two play scissors paper rock. Whoever
right.
loses this,
Okay.
loser, winner. I'll give you guys the options based on their pick.
Okay.
Ready?
All right, ready.
Scissors, paper, rock.
All right.
Scissors, paper, rock. Scissors, paper, rock. Yes.
There you go.
All right, so Nathaniel wins. Okay, so you chose Arthur Mac and First Federal, yeah?
Yep.
So I don't even know if they're gonna advertise these.
First Feddy.
First Fetty.
So we're gonna get. While I get this up, do you guys want to give like a what is Arthur Mac and First Federal?
What are they?
What are they? They're non-bank lenders.
Baxter loves his
Baxter is the,
non-bank lenders. Loves
From the
them.
previous episode, and I quote, "Bring it back, sicko." You love a bit of non-bank lenders, hey?
I do love a bit of non-bank lenders,
So
and the reason
non-deposit institution.
non-deposit
Yeah.
taking
Taking
institution.
And it's a common thing nowadays because
Yeah.
Everyone knows it's harder to get in the market than it used to be, and well, you'll find good clients get stuck at some ways, and there's obviously strategic ways to increase people's borrowing capacities.
Borrowing capacity, yeah.
But if you want to do it just in your personal name, then you've got to look at outside the box and start looking at, non-deposit lenders.
Yeah, yeah. At a sacrifice, right?
Yeah, at a sacrifice, because the days of logical thinking is kind of irrelevant, because if you don't tick a box, you're not getting a loan. And that's where the non-bank lenders come into play, because they're like, hey, we actually understand your situation a little bit better.
Yeah.
Yes, you still have to tick a box in some ways because we still have regulations, but we're a little bit more lenient and we understand, which is why they're making a big,
yeah, right,
footprint in the market at the moment.
So if you're going to give me a higher borrowing capacity at the sacrifice of a higher rate,
that's
right.
You look at it this way, because most lenders, and they're so fine to do this, they make a statement of going, this is what you're spending every single month, right? Your living costs are this. They determine what it is. And I'll give you an idea. Like just last month, had a lovely couple who were so frugal with their money. Like I'm talking frugal, not in a negative way, but they were just so good with their money that their expenses were completely below what the lenders deemed what it was. And so where these kind of lenders are going, what we understand what you're saying, we'll move forward with that, which then increase the capacity to borrow money.
Wow.
And obviously it's everyone's financial situation is different, but if you can show what you're doing, it sort of makes sense.
Yeah, right.
Yeah.
And I think the main thing with the lenders rather than the banks is the fact that lenders, as Nathaniel said before, non-deposit taking institutions, so they actually have a lot less, although their compliance is still very tedious, they have a lot more leniency with how they can come to their own conclusions on assessing borrowing capacity, rather than having to rely on set guidelines for it.
They're more logical, I find.
Exactly, and that's why you see all the things, and it's like, like solution, like smart solutions, or like real world solutions and stuff, because they genuinely are like accept your current position or your real position rather than adding like an outrageous amount of like fat or buffer to it.
3% buffer or whatever it may be.
As we said, I say to clients all the time, I'm like, look, at the end of the day, I can fix your interest rate in the future. I can't fix what property you buy.
Yeah. So if it's a matter of getting your foot in the door, right? What's 1% to 2% higher interest rate for short term, like to get your foot in the door, and then later on we can refinance that and structure, re-look at your strategy, right?
And at the end of the day, everyone knows their own financial position better than the banks do.
Yeah.
The amount of times that I've had people come to me and go, Dan, I've done one of those online calculators. Please don't take that as gospel.
Yeah.
I've done one of those online calculators.
Yeah.
I know I can afford these repayments. We've done our full budget based on our expenses.
That's right.
We know we can afford it. And then I'm coming along going, you know what? You don't tick these boxes, you ain't getting this house.
Yeah.
You can't do that. It doesn't make sense.
Yeah, exactly.
So think outside the box.
Bang.
Okay.
Bang.
While we have gone and discovered that YouTube and banged each
I don't
other
know where
in there,
we derailed that.
we have
so.
no. That's good,
I think that was a good
I had to
discussion.
find. I had to navigate the websites here because I don't have the right. Anyway, so we've Nathaniel wants to paper rock. We've got 1-0 to Nathaniel right now.
Well,
if Nathaniel wins this round, Dan has to professionally drink a beverage afterwards.
Roger.
If Nathaniel wins this round, it goes to tiebreaker. So, based on, and when I say based on, I'm saying like the prime principal and interest, owner-occupied interest rate, the one that they have on the front page that says starting from, the very, very
This is
best
wild.
advertised rate.
Testing the memory.
You're
We're
testing
going
my-
First Federal, and we're going versus Arthur Mack.
All right. Is it best advertised rate?
Best advertised rate right now,
Okay.
as of today.
All right.
So who do you pick? First of all, say which lender you think is the best, and if it goes to the same lender, then I'll
Right.
tiebreaker it.
Arthur Mack.
Arthur
I'm
Mack,
going to go First Federal for best rate.
best advertised rate.
Best,
Advertised
this is
rate.
what we're choosing, right?
This is
Yeah.
First Federal for best advertised interest rate.
I'm going to go, I reckon I'll go First Federal.
Okay, I'm going Arthur Mack.
All right.
I'm having a Slumdog Millionaire moment after.
Okay. I'm respectfully, Nathaniel's bang on again.
Yeah. Well done.
I think so. We got rates from.
You just got to back them. They look after us. So, you know, you just got to.
Rates have just FYI, by the way, rates have nothing to do with like the quality of the lender here because each of them has their own
their niche,
like area that they focus in. It's like First Federal is unreal for what it does well, which I won't talk about.
Yeah.
But what they do well, they're good at, and that's why they have the rates there that they do.
100%.
And yeah, again, like at the end of the day, as we said before, it's enabling that purchase. And same before between AMP and MeBank, like there's no point. Like MeBank might have a better offering by 0.1%.
Yeah.
But if MeBank say essential service policy is better than AMP's, and for a registered nurse they get 200k extra borrowing capacity than AMP, then cool. Like 0.1% means an extra $200,000 that you can spend on a home for a nurse. Like obviously that's a way better option for them.
It's an awesome option.
But Baxter, I want to have my cake and eat it too.
I've had too much cake, so you can have mine.
Yeah.
No, go to. You know, I'm going to restrain myself from saying
Good man. Good
Go
man.
on.
All
All
right.
right.
All right.
Jinx.
Keep on riding, baby.
All right.
Anyway, we will make sure that Dan, after this episode.
So I did lose that. Well done, Nathaniel.
Well done, Nathaniel.
That's all right.
We can make that a weekly game. Guess.
To be fair,
You know what I'd
process
really
of
like to
elimination.
see? I'd like to see like the audience choose the next beverage that we
Oh
test.
yeah.
All right.
If you've got a craft beer in mind,
Yeah.
So
let us know.
we have an unbelievable opportunity right now for the audience.
Yeah.
For anyone still listening, not only, first of all, you can recommend if Dan should wear a tie or not and be in a Zoom call during this or out of it, depending on your preference, and have your voice heard. You can be a swaying factor to the future of this.
That's
the visual representation. And on top of that,
choose the beer.
you have the opportunity to choose the beer. So
Any beer at all.
we are not lying when we say, if you enter this right now, you're probably one of 2 people that will enter it.
Yeah.
Even if we can't find it in Australia, we will import it
Pretty high odds.
before the next
a
episode.
majority shareholder.
Before we wrap it up, I want to hear, because
I hate wrapping it up. I want to speak forever.
I love dad jokes. So if it's a weekly thing, I want to hear the weekly dad joke.
Weekly dad joke.
Go on. What's the best one you got?
So I sent you one.
Oh, I just literally told one the other day.
Did you?
Yeah.
Did I?
I'll tell you one. I'm really bad at these, but the best, I love this one. It's like, how did the scarecrow get a promotion?
I don't know, Dan.
He was outstanding in his field. You're welcome. And that's the end of today's episode, guys. Thank you so much for listening. I hope you didn't fall asleep. Don't forget to like and subscribe. And I hope you learned something today. Out.